All right, guys, welcome back. So let's have a look at Nvidia. So we have 2 more days until officially 2024 is over. This stock has been pretty good runner for S&P 500. And if you take a look at the overall heat map of the market on Friday, where we had market pretty much pull back, Nvidia was down 2%. And you can see it was all across the board, right? So, and a lot of people, I'm sure you have heard in the past month or so in December, were calling out, hey, breath is so low. We are running on a basically on the edge of the blade, where a few names are up while everything else is not doing well. And if you take a look at the S&P 500, I mean, it was hovering around all-time highs a couple days ago. But if you take a look at the Dow Jones Industrial, well, Nvidia is in it officially. It has pulled back, and again, it's not significant pullback, but it did pull back like for 10 days or so, 5%. At the moment, we're sitting around like 3.8% down from its highs, but it's trading below its 50-day moving average. So can market pull back a little bit more? What's going on with the chip makers as a whole? So let's have a look at Nvidia. So at the moment, identical situation for NVDA. So from its all-time highs, this stock is not down too much. It is down about 8% from its all-time highs. And I'm looking at the closing price. I'm not looking through from the 152 all-time high print. I'm measuring from the basically the highest opening and closing prices that we have. So this yellow line on my chart represents 50-day simple moving average, and it's been having a hard time staying above it. If you take a look at the heat map of S&P 500 for the last week, you will see, I mean, overall, yeah, we did have a little bit of a relief bounce. But if you take a look at it on a monthly basis, 1 month performance of S&P 500 stocks, this is the picture we have, where you can see Broadcom became a $1 trillion stock plus 46% in 1 month alone. Apple, 8.7%. Amazon, 7.5%. Tesla, 27% rally in 1 month. Google, 14%. Meta, 4.5%. And there you have Palantir, about like 20%. And look at the heat map for the rest of the sectors. Healthcare got hit pretty hard. Energy, materials, utility, industrial names, financials got hit pretty hard too. Consumer defense. And look at the chip makers. Of course, chip makers were significantly down. Some certain stocks got hit pretty harder. But Nvidia and Qualcomm was relatively flat. So burning premium. So can these names pull back more? And this is what I'm watching for actually. So for me, 8% from its highs. Nvidia, if you're somebody who is like, I have to own this name, it has to be in my portfolio. Well, if you own indexes, I mean, it's already in there. But if you have to own it, I mean, is 8% enough of a discount? This stock is trading at the capitalization of $3.3 trillion. One of the most expensive stocks. Maybe Apple is first and then second Nvidia. For me, it's not enough. And I think that this stock, if we're going to get breakout, yes, I will be certainly watching this name to the upside. And I have talked about all-time highs being resistance, 149. But can it come down to 200-day moving average if overall market starts pulling back? Very, very likely. Because as a sector, as a whole, I keep an eye on SOX and SMH. And I was looking at these ETFs let's take a look at SOX. You can see from July highs, it hasn't tested that high, and it's been in this downtrend, but at the same time, it's been making lower highs and higher lows at the same time. So it's contracting to produce some sort of a move to the upside or break down below and go to the downside. So as a sector, I mean, semis 40 something percent. If you, I was looking at SMH, but contraction right here. So which way it's gonna go, we will see. But I am more of on the profit taking side for the January and February, because I was keeping an eye on, in general, like volatility. I mean, after Fed, also people were a bit nervous, but we sold off. But on Friday, we saw a little bit of an uptick in VIX, so which means people are hedging themselves a little bit going forward. At the same time, I was watching for the last like 3-4 days, and it could be overall market just end of the year, people just balancing their books, and there could be a reason why we see repo rates rise. But usually when that happens, it means we have liquidity basically tightening a little bit, and you can see for the last 5 trading sessions or so, repo has been going higher. And we haven't seen this much of a repo. Like on Friday, 268 billion. We haven't seen this level since November 13th and October levels. So you can see it could be demand, from the banks. Again, different banks may have different end of the year goals to basically get the books in order, but it is reducing the liquidity. Liquidity is getting tight, which means it's not always negative for the market. But for me personally, like to trade, especially like large cap, like big dogs out there long, I certainly pay attention. If there's a liquidity, and there's money, easier to borrow. Like if liquidity gets tighter, the margin levels get tighter as well, right? So a lot of people might have a hard time borrowing the money and basically leveraging. So it affects the leverage, certainly. That's the only reason why I just keep an eye. And I use this Fed repo, Federal Reserve Bank of New York repo operations data just in like small caps and for the most part large caps. And you can see when the repo rate was going lower, market was on an ease mode and we were just having like this smooth uptrend. But we'll see what happens as soon as January kicks in. But even then, I'm watching in general for some sort of a rotation, because if you take a look at the S&P 500 year-to-date performance, this stock is in S&P 500 could be one of the best stocks, actually, 176% gain. And I'm looking for some sort of a rotation, people just taking profit and going elsewhere. But again, 8% is not enough for me, and I'm watching for some sort of a pullback. If you take a look at the S&P 500, maybe we will see 5-6% correction, maybe towards 200-day moving average. And I would want to see the what NVIDIA is going to do when we have overall market basically in a profit-taking mode. But if semiconductors break out to the upside, no problem. I have no problem going long, but I'm more a little bit biased to the downside. I don't have a position because volume has been low relatively end of the year. We all get that. But as soon as second week of the January hits in, I want to see how we're going to trade in general. But if we start coming down, 130 would be my support for NVIDIA. And then the 200-day moving average, more of a 117, 120-ish level, this red line on my chart. This would be the area I would watch as a pullback area for NVIDIA. And I have been talking about this one for quite some time, but I don't remember when we talked about NVIDIA in general. So that's my take. That's what I'm watching for NVIDIA. And I will see you guys all in 2025. Happy holidays. See you in the next video. Peace.